This week in part 2 of We're Not a Stockbroker, we're going to talk about not just asset allocation, but asset location and why it's more than just paying a little bit of taxes. It's permanently shrinking the pool of money you have to enjoy today and take care of your family tomorrow. Last week, we talked about that stockbroker mentality that many advisors, so-called, that just have given themselves a bigger, broader title, may still have, but how clients still look to advisors like their stockbrokers, may even still have a little bit of stockbroker mentality in themselves, in the sense of thinking about the investment options very narrowly between cash and stocks. That's about asset allocation. We want to talk this week about asset location and how where you put the assets that you choose to invest in matters almost as much as the asset classes that you choose to invest in as well. From day one here at 10 Capital, our philosophy has been around partnership, both externally and externally. But as it comes to investment, flexibility, optionality, and really coming to try to find as many solutions as we possibly could to bring to bear for our clients' unique stories and goals. Different assets, simply put, do different jobs. And so you've heard me say in the past, people might look at a bond and say, well, it's not really doing the same thing my stocks are doing. That would be like saying my offensive lineman isn't scoring as much touchdowns as my wide receiver. They're there to do different things. Bonds, like those offensive linemen, they're there to protect. Equities, like wide receivers, they're there to be a little bit more flashy, but they can be a little bit more temperamental too, like many wide receivers. So what we need to do, again, is understand all the different things we can invest in and then where the appropriate place to put them is. In between cash and stocks, of course, lives alternatives, as JP Morgan's Guide to Alternatives describes them. They're flexible, unconstrained strategies in both public and private markets for non-traditional approaches. That doesn't mean that alternatives, we've heard this before, are something that are appropriate for everyone, everywhere, all the time. What it does mean is that an advisor, so-called, or a stockbroker who's only prepared to talk with you about cash or stocks is really leaving so many different solutions on the table and a meaningful part of a modern allocation tool set. The real issue, again, is fit. What are we trying to solve for? Is this about protection? Is this about liquidity? Is this about long-term growth potential? That LIVE methodology, again, that you've heard me talk through: liquidity, income, volatility, protection, expected return, and a sound process and a sound array of investment solution needs to be broad enough to have multiple solutions within each of those categories. As we talk about here at 10 Capital, and have really made it a renewed emphasis of late with clients, prospective clients, when you not only find the appropriate array of investment solutions, but get those into the appropriate locations, you move into something that is far more coordinated on behalf of the client. You're not just focused on, again, chasing gross returns, but really building out a system that's going to maximize what you get to keep. Over a 20, 30-year retirement, the difference in kept return can be one of the biggest drivers, again, of ultimate return, and consequently, whether your plan feels tight and something you struggle to live within, or generous, not only for today, but again, and hopefully what you get to leave to those you love tomorrow. So what does good advice sound and look like? If you're not working with someone like 10 Capital, which you're welcome to call us anytime, how do you know if this is a mentality? Well, you probably already do. So many of the prospective clients have come in and said, we're confident. Again, we have a lot of money. We don't have a lot of clarity on what we're doing and why we're doing it. That lets you know pretty quickly and with a high degree of confidence that whoever we're working with probably still has a stockbroker type mentality themselves, as opposed to a comprehensive fiduciary-based advisory perspective. But in short, advice should sound calm, clear, be much broader than a product pitch, but focus, again, on a plan. At times, calling out, i.e. cash, because I know people love it, and telling people, hey, we acknowledge and respect the caution that you may have, but at the same time, do you understand how avoiding volatility today is bringing in undue risk tomorrow? Most people don't. Sound wealth management is not, again, about forcing every dollar or any one particular dollar into a given asset class, but ensuring that every dollar is invested for a reason and has a reason, for being where it is. The proper question in summation is whether the mix of liquid investments, income assets, growth assets, and alternative assets is aligned specifically with your unique goals, obligations, timelines, and of course, temperament. In closing, you've heard me talk many times in these videos that success as an investor is not about prediction. It's about preparation and really making sure you're walking through things. As we shift this mentality, as we go, each of us individually, from that old school stockbroker mentality to more of an advisor mentality collectively, we move to asking better allocation questions, both in terms of what we're investing in, but also where we're investing it. And when you're doing that, you then shift automatically to a mindset that invites planning discussions and shifts away from that pressure of having to have predictions as part of your process. If you want and don't know what that means, we're here at 10 Capital to walk you through a very process-driven, from goal setting to the plan that's going to help you achieve those goals, to then again the investments and the investment location that can bring it all together. Thanks so much for watching.